What is going on? We don't even have anybody in here yet, but what's going on everybody? It's JT here with JT Invest in You. Of course, we're joined with the crew for another Algorand ecosystem update. We've got David over at Crypto for Change. We got C. Will over at Passive Income Network. He's frozen right now, but he's giving everyone the great peace sign for sure. What's going on,
He
everybody?
stays frozen like that. We just gotta leave him there.
That'd be dope, actually. How you doing, David?
Doing good. Also, Siwa's in Hawaii for all those who don't know, so that's probably why connection might not be as great. But that's
It's
gonna be
that
funny if he's
it's
just
that
sitting there like that.
it's that great Hawaii internet. Oh, what
Shit.
up? What up, C.
Oh, I'm
Will? How
back.
you doing?
Oh gosh, yeah.
You're
Yeah, he's
back.
back.
I'm good. Like I said, I'm still in Hawaii. The skies is beautiful behind me. Yeah, everything is great. Algorand covering a little bit, so that's good. How y'all doing?
About the same, honestly. I mean, the market had a very interesting day today where, just a couple hours ago, things, I checked my portfolio and Yieldly was up like 17%. Algorand was up close to
Oh wow.
10%. And now Yieldly's down 11% and Algorand's only up like 2%. So everything has definitely dipped over the last couple hours. Um, so we have that going for us, that's for sure.
Yeah, I
What do
feel
we
Yeah,
like
got?
we've
yeah.
just been seeing like incremental just ladders, like just steps down, like a little bit up, but then like, back, dropping through the floor. At least that's what we've seen over the past like I feel like 3 weeks is it'll drop to an all new low. It'll kind of come back a little bit of a relief bounce, and then it'll fall back through it, a little bit of a relief bounce, fall back through it. And that's where, it held at 69 cents. I know a lot of people are watching to see if it holds like 67. I think that's a
Mm.
big key point for Algorand to hold, and if it can hold, then that could be bullish. If it falls through, then we may be seeing another month or so of, I think, definitely maybe not all red, but I think we would see an initial dip that could be pretty bad, maybe even to 50 cents or lower, and then maybe just trade sideways for a bit.
Yeah,
Yeah,
I can. Yeah, go ahead, JT.
no, I was gonna say, I mean, I do agree we are in this down channel right here, though, but uh, right around 67 cents is a great support where we already have one wick bouncing off of. And if you zoom into the 4 hour right here, I mean, that support line goes away because I only have it on the daily, but you can see a very clear bounce right from where it was.
Mm,
So we
mm.
could be bouncing off the support line and bottoming out, but I wouldn't bet against the trend because the trend is still clearly down. So I would wait to see if this is a bottom and then we break out of the trend over here or something. Then
Def-
I'd be much more comfortable buying once we get out of this clear downward channel right here.
Yeah,
yeah,
I think
definitely. It
I think
looks
if
like
Algorand,
we're gonna be
Go for it,
look like
Sibo.
we'll be consolidating for sure for a while.
I agree. I will say if we maintain, um, this bounce right here and can at least keep pace with the lows from, July or maybe be like a couple, half cent above it and even put in a higher low, then that would be a bullish sign. But if we break below this 67 cent and we put in a macro low comparatively, we have a low here, and then if we get a low lower than that, that's a bad, that's a definitely bearish sign for sure. But if we hold this position right here and even put in a slightly higher low, because as we can see right here, it's a little higher than it was before. So we could put in a macro high low, which would be more bullish than bearish. That's for sure.
so what's your thoughts, JT, if we do see, 67 cents, if it falls through that, I mean, obviously that's going to then become a very hard level of, resistance when we, trying to break back through it.
We really could ride this channel pretty far down. It really depends on the market. This channel really could ride down pretty significantly. I mean, the next line of support isn't until about 50 cents. So if we do break 67 clearly, I mean, not like with a wick that goes down to like 66 or 68, but I mean like a nice clear break. I could see us tumbling down to 50 cents for sure.
Oh yeah, if it
Do you
closes,
have any charts that correlate Algorand and Bitcoin?
Let's see. I could probably
Because I know
add Bitcoin
Bitcoin
to this
is,
right now.
headed back towards 40K right now. Double check on that. Yeah, it's almost 39.
Yeah, if you see right here, I don't know why I can't move it now that it's red, but oh shit, what's going on? Yeah, the Bitcoin is overlaid in orange, so it has similar movements, but not completely. Obviously, right now there is divergence here at the end where Bitcoin is kind of, going up a little bit or staying sideways, and algos drop down. So it's losing a little bit of its correlation, but as you can see, not much. I mean, this is still pretty correlated. And if we zoom out to like the weekly, oh, I don't know why it puts it on a different scale. Let's see if I can fix that.
Yeah, I'll say the market is definitely crazy with I'm gonna say prayers to everybody in Ukraine and Russia and everything that's going on with the lives, but it's definitely seems to be affecting the market. I hear the Russian economy dropped, I think, by like 50%,
Yeah,
and then we
actually,
got
it's pretty crazy. Let me see if I can pull that up too. I forget the ticker for it.
yeah, because that's wild. That's a big dip, and then our stock market is definitely got hit.
Yeah, I actually moved a lot of some of the things I was in that I was taking I was already down a little bit in. I moved all to cash and pretty much just been sitting on it for a while. I think once I do jump back in, most of it I'm going to jump back into Algorand and some
Hmm.
stocks, but I'm most bullish on Algorand. Like I said, I think if we see it hit 50 cents, that's going to be a huge buy signal for me. Obviously, once it plummets through 67 cents, if it does go through there, that's when I'm going to start, dollar cost averaging on the way down. But 50 cents is my big next
Jesus
buy target.
Christ.
Yeah, I hear you on that one. If it hits 50, it's definitely gonna hurt. But I'm gonna have to load up and stay committed.
Yeah, I didn't realize how awful the Russian stock market has done since 2007. Anyway, after the 2008
Uh,
crash, let's see.
It
After the
was like
two,
5 years building up, I guess, from with this big crash. Like it literally wiped out 5 years of upward momentum.
yeah, but look at it. It's like 5 years from like a pathetic bottom. I mean,
Yeah.
you see this drop
yeah,
of
that's bad.
82% drop in this like broad Russian ETF right here after the 2008 crisis. And then we have, let's see. Sorry, I keep on getting stuck with this. After the other day when they invaded Ukraine, that's a 58% drawdown in the matter of, just a matter, actually,
A couple weeks.
yeah, really,
Yeah, so their
that's
market is pretty
crazy.
much finished.
Yeah,
And I mean,
Yeah,
didn't the president say he was like freezing like all their assets here in the States and anything that they're associated
well,
with?
yeah. From my understanding, they have like over trillions of dollars everywhere. Like, so they got money for sure.
yeah, I don't think they're too worried
If
about the
anything,
sanctions,
like,
especially
I
because, sorry, go ahead.
No, I was just gonna say, I feel like if anything, like what we've seen with obviously now the Russia Ukraine, but even like the Canadian issues that was going on, and I would even say somewhat with the COVID and stuff like that. I think it's pointing towards a more future where you know cryptocurrency and decentralization and a lot of these things are going to be important. The whole Canadian bank situation, the
Yep.
money and the bank and the government's trying to freeze assets for people who are trying to support them. Like, you know, we all say we have the best government and we all say we trust and that they're doing good and whatnot or whatever it may be. But like when it comes to it, like they will not flinch to make sure that what they want to happen happens. And if the people get too in their way, they have it locked. And then you saw it in Russia where a lot of people were trying to go to the banks and withdraw money, and then they were like a run on the bank type situation, and then they were trying to limit how much people could withdraw. It's like
Damn.
that's a
That's when.
future that
Yeah.
is crypto is putting a spotlight on. Like it can be solved, like whether it's Bitcoin or whether it's another form of cryptocurrency that comes out one day, or even something like a Monero. But I'm sure there's all kinds of hurdles that it'll take to overcome it. But I think if anything, this is just the things we're seeing play out in our daily lives is showing just so much much more valuable cryptocurrencies can be in truly decentralized monetary system.
Yeah, in a situation like that, that's when you gotta like definitely go to grab your debit card and buy as much stable coin as possible to do a quick transfer. I feel like that if you could get some money out, but I couldn't imagine all my money being stuck in the bank. That would be
Yeah.
terrible.
And just hoping that and hoping that once all this is settled, that bank is still maybe even standing. Like literally, if you're in a Ukraine, it's just there's so many crazy things. When I mean, I can't even fathom it. Obviously, I've never lived through any type of situation that's going over there. I have friends who are posting videos and things like that, and my heart goes out to the people who are there. But yeah,
Yeah.
it definitely points a bigger spotlight on why there is a need for the stuff we talk about here, which is decentralization of money and not the central banks and these governments having all the control of people's money and their assets.
Well, this is a good pivot right here, right? I saw JT have AlgoFi up. So we are now self-banking ourselves. Somebody want to do a nice breakdown what this is all about for the audience?
Yeah, I mean, I guess I'll give it a whirl. I mean, if I to add on what you said, it really banking the unbanked to a degree because I say to a degree because it's not 100% because
no debit
it's a
cards.
borrowing and lending platform that allows you to borrow against your assets. But that's the thing, you have to have assets to borrow against. That's why I say it's not really banking the unbanked, because if you don't have assets, if you don't have a bank to have dollars to purchase these assets, then you're not going to be able to really take these protocols. But I will say it's towards the right direction, towards decentralizing financial transactions and instruments like borrowing and lending and leverage. All of those things can now be done by a couple clicks, a couple seconds, and all of a sudden you have whatever you want to have, and you can earn currently amazing rewards. I mean, the latest fund that Algorand did to promote DeFi, that's where a lot of these rewards come from, and you can see by supplying stable or USDC, you're going to get almost 11% APR paid out in Algorand right now because of these rewards, which is amazing just for supplying the collateral. You don't have to borrow anything. You don't have to take on any risk. You can just supply collateral. I mean, you can take
Now, do
on
we know when
risk.
that is going to end out on AlgoFi? So, because obviously without those bonuses, that's where a lot of people were like, when AlgoFi launched, I know a lot of people were like, the rewards for staking or lending and borrowing were not super high. Obviously, with the grant, that is it looks way more appealing. But how do we know how long that's going to last until it's gone?
Well, it's 3 million. So we don't know.
I don't know how laid out they're trying to do it. Like, I don't know how slow they're releasing the rewards. So it could be for a couple months, could be for a couple weeks, could be for a year. It might also be up to the protocol too, because from what I understand, they're just like, here have some AlgoFi to give out to your users, and same with other apps. So it might be a case where each app decides how they want to distribute it in the time schedule. But no, I have no idea when those rewards are going to end. But I am looking something
3 months. What the team has said. I don't know if that's
because they got to have some type of fee structure where they can take a portion of the swap fees or something to replenish the pool. Got to be some circulation going. But
there's also part of it, part of the supply and borrow. Sorry, I'm trying to look something up real quick. Part of the supply and borrow comes from supply and demand. So some of those APRs are from supply and demand. And since the market is, down in the dumps, there really isn't that much demand. So the APRs are pretty low.
Yep.
I don't know why I'm having trouble logging into my Kucoin right now. But I wanted to show an example because I used to borrow a lot in Kucoin, and during the peak of the market, you were able to get 35% on USDC, USDT. It was kind of crazy. I was putting out 28-day loans where I was earning 30 to 35% APY on my stable coins. But then when the market took a tumble, that's now come down to 3, 4, 5%. I want to see where it's at now. I haven't really looked at it too much since AlgoFi went live, but
it says Steve Basil says, how long does the program go on? 3 months is what the team said. Can anybody confirm? $3 million for 3 months?
You would think that they would have to have a fixed supply or a fixed time frame to be able to show accurately what the rewards would be paid out, and like the APRs and APYs based on what people supply and borrow. So, yeah, very well could be.
Yeah, I'm sure the
and
information's
then
out there. I just, yeah, I don't know off the top of my head.
yeah, I haven't seen it. And then they got they said we will get our retroactive rewards on the 28th for anyone who was using this site early.
That's dope, actually, because I've been using the site since day one, and I would love some daily. Yeah, I just did the math right here. Okay, I'll pull this up. So this is Kucoin Lending. Let's see. Let's make it a little bit bigger.
The Joker says 35% Kucoin earn.
And look, as you can see right here, for let's do 28 days, because that's what I would normally do. You get a different rate for 7 days, 14, and 28. That's the longest you can lend things out for. And on 7 days right now, the going rate is 2.55% annualized. The 28 days is 3.28%. And like, as I said, during the peak of the bull market, that was up to 35%. So I suspect the same thing is going to happen to these tokens on AlgoFi, and as more demand picks up in the market, people will be willing to take on more risk, which means people will be willing to pay more in a percentage for the loans they take out, which will increase these APRs. But as of right now, with the markets down, nobody, borrowing probably isn't happening too much. Let's look at these analytics. Let's see. I wonder if we can find it. Let's see.
Looks like Algorand Governors Club says the 2 million over 3 months.
I'm actually surprised.
200,000 earned for early adopter rewards before the DEX launch, so 1.8 million to be distributed across the next 3 months.
Yeah, look at as you can see right here, the market has been super flat for a couple of weeks on borrowing stable coins off of AlgoFi. There's been no interest in it. The only time that changed was just a couple days ago when these rewards came out and people realized they could borrow and then resupply them and get the rewards. I guarantee that's what this spike is. But up until because that was just a couple days ago. So up until this point, borrows have been very flat, which means demand's flat, which just means the APRs are going to be flat. And hopefully when the market kicks back up, we'll see APYs similar to what I was seeing on KuCoin. Because as I was saying, dude, I was raking in some good cash flow, loaning my money out for like 30%.
Yeah, that's a high amount. AlgoFi again, the TVL is surpassed Yieldly. We got numbers on those two metrics.
Yeah, let's see.
People have been wondering when Yieldly will lose its crown for the highest TVL, total value locked, and it has just happened. Yep.
As you can see right here,
20 million more.
AlgoFi is 65 million and Yieldly is 49 million. But that is including borrows. If I click borrows off, which I think is fair to do, then it is still technically behind by less than 1 million, like 49.95 and 49.05. So it's without the borrows toggled on, it is nipping at Yieldly's heels. If you toggle borrows on, which I think inflates the TVL number because technically borrow is taking it off the platform. But I
guess with a liquidation, because I have two counts. One of them I have over leverage, right? And then recently when it hit this dip, it has liquidated me. But it actually liquidated me twice. So what it did, it took about a few percent off to pay back the loan. Then when it went down lower, it did the same thing. So that was a good experience to learn how that went. So I feel like the borrowed is a good metric to keep on there, because if it gets liquidated, then the platform has now, took that money.
Yeah, no, I agree. That's why they put it there for sure. But to some degree, they're just taking the money that's supplied as collateral that you supplied that's still there in the supplied section of it. So I don't know. To some degree, it still inflates the metric. But regardless of the way,
still close, yeah.
Yeah, no. Regardless of the way you look at it, it's either above Yieldly now or like insignificantly behind it.
What is Tiny Man? I can't see the bottom.
19 million, and then you've got PactFi. Their DEX just launched, and they actually did a great job by making sure that they were being tracked by DeFi Llama on like day 1 or 2, and they're at 271,000 already, which is pretty good. I actually haven't used their DEX. I don't have any of you?
PactFi? No.
Have not. Most of mine, I actually just started messing around with AlgoFi. I kind of wanted to give, a little bit of time to see if there was any bugs or any things that needed to be worked out. So I kind of sat on the sidelines and watched, but I actually just started supplying my algo. And depending upon, obviously, I know some people maybe already are borrowing and buying more and playing that ground, but I'm going to wait a little bit and see what happens with Algorand sitting on this 60. Like, for sure, if we break through and we start an uptrend and we're bullish, I'll definitely borrow and start putting that money, my algo that I have staked there or lended there, to work. But until we for sure have a reversal, or I feel like we're at a bottom where we're going to trade sideways for a while, I'm not touching it, because I don't even want to go down the rabbit hole of being liquidated, because I used to do that stuff with margin trading on other exchanges, and it just adds a whole new layer of risk and just, anxiety in the market, and I don't like that anxiety.
Listen, I just got liquidated, and no, it's not the best feeling. But it's a good to experience it, like I was saying.
Oh yeah,
for
yeah,
my
it
smaller
definitely.
account.
Yeah,
I now
once
know what it's
you
like.
experience it and you see what can happen, that's when you're like, okay, I need to be smarter about when
Yep.
when you roll those dice and how you play it, because it can make, if you have, say, $10,000 in AlgoFi, and you can borrow what, they 90%, up to 90%.
Yeah, I think it's 98. It's 80 or 90.
Yeah,
But
so
yeah,
obviously being able to take that amount out and then go buy more with that's a huge leverage, that can really pay off big time if we're in a bull run. But if we're in a bear market, it ultimately just ends up eating away at your original stack, and then that makes you frustrated and can honestly turn you off to certain aspects of the market, or even off to crypto in general, because I've seen many people get liquidated and then never want anything to do with it just because they didn't know what they were doing.
yeah. Luckily, when I got liquidated, the money that's stable that I did borrow, I made a good flip on it. So overall, I'm not down, but it was an interesting experience.
Yeah.
Yeah. Joker here is saying liquidation is a must to experience that hurt. And, to some degree, I would agree. I have yet to be liquidated in the crypto space, but I will be completely lying if I would say I haven't been margin called plenty of times for like options trades and things like that I went too margined on my brokerage account. So I totally know what it's like to have a brokerage. At least with a centralized exchange, though, they call you or give you an email and let you deposit funds so they don't just liquidate your money. So with a decentralized exchange, that obviously can't be had. So once you reach that point, you're kind of automatically liquidated, which
do you know how that process works? Is it the AlgoFi platform liquidates, or I heard something about another user is actually buying it up?
Yeah, I believe it's done by bots at this point, and I believe users can set up those bots, like liquidation bots, to do the liquidation. But essentially, you'd have to those liquidators would have to put up money at first to basically buy the loan out. You know what I mean?
Yeah. Okay.
And that's actually what's really interesting. To add on to that point is with XBacked, they're doing something a little bit different, where the liquidators. When you pool XUSD, which will be their native stable coin, that XUSD can be used to liquidate people's accounts. So liquidators no longer have to be somebody that has capital already. You can actually use the capital that's in those pools to liquidate people's funds, or accounts, which is pretty cool, because that allows everyday people who might not have the money to cover somebody's loan to use the pooled resources to do so, and then take benefit of being a liquidator. So
yeah, this is getting interesting on Algorand.
And it is really interesting. I will say, I mean, a great, if you're looking to use AlgoFi, in my opinion, this is just an opinion, not financial advice, of course, a great thing that you could do is, supply USDC or supply stable, supply one of them, and then borrow the other one. Make sure you still have some left over. Take that USDC and stable and add it to the pool. Add it to the pool over here. Take your liquidity tokens and add it to this USDC stable pool. So yeah, you borrowed and you're taking on risk, but you're borrowing stable coins. And if the value of one or the other goes up or down, I mean, they're a stable coin. They won't change by too much.
Yeah.
And then you can stake those LP tokens right here and earn right now 11.5% APR, and APR is a little bit more than APY, so that's probably like 13-14% APY. We don't have to really get into the difference, kind of really no point, but it is about probably 12 or 13% APY in the long run, paid out in both Algorand and stable. And the great thing about this is you can then use those rewards to pay off the original loan. Like if you borrowed stable, you can use that stable to pay off the original loan. Or if you don't want to do that because you're not worried because you didn't take on much risk because you borrowed a stable coin and supplied a stable coin, you can take your stable rewards, go over to stake, and stake stable right here for more stable for about 10%. And then you could take the Algorand that you were just rewarded and supply it back here as collateral and earn 5% APR.
Are you laying
payout
the
in Algorand.
strategies out? I love it. I be on that same shit, you know. That's how you do it.
So, can you obviously you do have stuff supplied? Can you show what it looks like for people who would have to like pay back? Like, what does it look like paying back your loan? Is it like daily? Is it however often? Is there a set schedule?
Yeah, sure. I don't have much Algorand in my wallet right now, so let me claim these rewards that I have right here. I'm just gonna
JT got that utilization high.
I'm just gonna do that real quick so I can type in my password.
Yeah.
Feel comfortable about it. Yeah, no, my utilization is very high. I wouldn't suggest you putting your utilization this high unless you structure in a way that
It's gotta be
honestly,
heavy stable coin.
honestly, the way I have it structured, it barely moves. Like the market could go down like 20%, and it would probably go from 87.89% up to like 88. It really wouldn't move whatsoever. Primarily because, as you can see here, I have way more algo supplied than I have borrowed, and that's the only thing. As algo goes up or down, so does the algo I borrowed goes up or down. So it really, I've structured it in a way where I'm not too concerned about being liquidated. That being said, to get back to your point, you do not have to repay the loans every day. You are charged interest, and you can see your interest right here, total. Right now, Algorand interest, if you borrow, is 2.76%, really low. I mean, that's better than you're going to get at my lowest interest rate in the real world is a 6% car loan. So, I mean, you're getting a better rate right there. And there's no time frame. You can take years to pay it back if you want, but you will also accrue years worth of interest.
Right.
As long as you don't go over your borrow utilization, you can technically hold these loans however long you want. You can repay them however frequent or infrequent you want, but you just have to understand, obviously, the longer you have a loan out, the more interest that it's going to accrue over time, for sure. But repaying, it's really simple. You just click on the asset you want to repay. Let's click max. I don't want to do a full max because I want to still use my be able to use Algorand, because some of these protocols, if you hit max, then you're below the threshold that you need to hold in your wallet. So honestly, I've done that on TinyMan way too many times, where like I'll sell all of my Algorand and then I can't do anything after that. I'm like, shit. Oh yeah, I shouldn't have done that. Oh well, everyone just saw my password.
Run.
Yeah. Good thing it was all dots.
Can you
Yeah,
put
I'm
your
saying, they don't got those
25
keys.
keys up behind you? No.
Yeah.
Yeah, put the keys up.
Yeah, the first word is beans.
So then so then it pretty much just went ahead and you paid that 6 algo back towards the amount you had borrowed up there.
Yeah, real simple. And like, as you can see right here, you can click on any of these. Like if I wanted to borrow Go BTC.
Okay, let's be clear real quick.
I could only borrow 0.01, which is $400 worth. But
so when we this is the part I had to double check on. Correct me if I'm wrong. When we supply, say stable, you get the 10%, correct? And if you also borrowed stable, you get 10% APR on the stable you borrowed. So it's kind of like you're getting 10 in 2 different pots. Can we confirm that?
Yeah, I'm not 100%. I do think it's either or. So I think it's if you supply or borrow, you're going to earn that 10%. But I'd be really curious to know if it is an addition. If it is an addition, that's amazing.
Yeah.
But I am not.
Wouldn't be. I feel like
I'm
if you're
not
in
for
the
certain.
same, if you're borrowing and supplying the same one, I feel like it's probably a flat, one or the other, because they're also the same. Like it doesn't.
Yeah,
vary.
I think that's right.
Algo, and I borrowed stable.
I think it's if you're. I think the way I understand it, it's if you're participating in it whatsoever. So
Yeah.
if you supplied USDC here for uh, almost 11% APR, and then you borrowed stable, I do believe you'd also get that 11% from stable. You know,
Yeah.
Yeah, that's what my
you know what I'm
question.
saying?
Okay.
But I
Yeah,
don't
that would
think if
make
you
sense.
I don't think if you borrowed USDC you would also get. I think it's just participating in borrowing and lending of a
Yeah.
specific coin
Okay.
gets you this reward, whether
So
it's
then I
borrowing
have
or
a
lending.
question
Then if we
for you
do,
guys.
yeah, I'll say
Go
JT.
for it.
Then
Sorry, I
if you
didn't hear the
do
question.
that and put that LP in there, 7%. That's a nice play.
The amount of money that AlgoFi is making people right now is incredible. I mean, I would just of course caution everyone to be careful because there are strategies you could take which would get you liquidated, of course, and you want to avoid that. But if you structure your risk really well, I mean, even if you want to take on some risk, I mean, yeah, that's totally acceptable. Just make sure you're structuring it in a way that you're comfortable. You know, do the math and make sure that if your portfolio drops 20, 30, 40%, you're not going to go over the borrow utilization and get liquidated. But yeah, I mean, otherwise, it's a great platform. I'm making plenty of money passively. I love claiming it every day. Like my favorite two things to do are claim my AlgoFi rewards and claim my Yieldy rewards. I do it. It's like a religious thing I do almost
Yep.
once a day. If I forget a day, then it's even better because the next day I'm like, oh, there's more here than there was the last time I checked. This is great.
So then looking at like, obviously we have, there's the big ones. Obviously I know PactFi is something new, but you have, Tiny Man, which is a great place to earn some, passive income. You have Yieldly, which is a great place to earn some passive income. And then now obviously you have AlgoFi. We have new stuff coming out. You got Humble DeFi, you have Folks Finance, what does I guess what does the whole overall market look like, and how much money starts to move from these first movers to the new guns and the new ones on the block, or do you think it's all just new money? Like,
I mean, that's a good question. I didn't realize that this music was still on. Sorry if that annoyed anybody.
Oh no.
No, that's a really good question. It really depends on the market. I think if we're still kind of a boring, sideways or bearish market, I don't see new money coming in. So I think it will be spreading out liquidity of the same money that's already in the ecosystem for the most part. And I don't
how
really
do we
see.
see institutions using these things, or do you think this is just going to be like venture capitalist type people coming in and scooping up, using their money in a super safe way to earn, some of this money from the Algorand Foundation, that they poured into it. How do institutions start to use the DeFi platforms? Because, honestly, I can never see an institution wanting to use Yieldly. I mean, I would go as far to
I
say,
couldn't see it either.
that's going to be something that's always used for, younger people, maybe even, 20 to 35-year-olds, maybe above. I mean, obviously I know some people above, but it's mostly people I've talked to and showed them the platform. But most people, that's not going to be a big institutional, use case there. Do you see institutions starting to use these types of services, or is this mainly just going to be, people who are crypto savvy and not, just buying it on Coinbase and, who know how to use DeFi, in a smart way to yield farm, LP farm, whatever it may be.
Um, Sorry, I'm just checking out Pactify here, but I think that it depends on the app, 100%. I agree that I don't think institutions will be using Yieldly. Maybe some people inside a institution might be like, oh, this is interesting, but I couldn't imagine the institution itself putting like the company's money into something like Yieldly. But that said, I do think they would use potentially some of these dexes. I mean, they might wait a year or so to see which one's the safest dex, but I think as much as people, it's the least popular one so far because you can't use it in the United States yet. I do think AlgoDex will be the one, at least the dex that is used most often by institutions, and a lot of that comes down to the order book and being able to actually see the order there. I mean, a lot of institutions, especially if you're putting up millions of dollars, you want to be able to see that order is there on the other side. You don't want to just click a swap button and hope that what comes out the other side is what you're anticipating to come out the other
Right.
side. You want to essentially click on an order like you can with an order book and buy that order or sell to that order. And so I could really see institutions using AlgoDex for sure. But that
What I'm
said,
seeing is institutions coming in and, like, for example, like how Scaramucci and them, they're all on the back end. I can't imagine him like using Yieldly himself. So I think guys like them, Jamie Dimon, would actually go build an AlgoFi or buy up AlgoFi or something of that nature, so they can control the DeFi platform that's built on Algorand. And
Well,
more of a competition.
well, then it wouldn't be DeFi anymore, would it?
Yeah.
No, it'd be a CFI DeFi. But I think that's the how they like to do things for they have control, at least the big guys.
Oh,
It is all venture capital money behind this DeFi.
That's
So
definitely
it's the same people.
it's definitely how they like to do things. I mean, hopefully that's not true in the long run. I could foresee a day where institutions are using something like AlgoFi, to be honest. But I will agree that a lot of it right now isn't really institutional money. It's VC money, which is a little bit different. VCs, for those who've never talked to anybody that's a VC, they're kind of the crazy people in finance. They take on a lot of risk, and a lot of times for a lot of them it pays out really well. For some of them, it causes bankruptcy. That's the name of the game of being a VC for sure.
So then, another question I feel like I would have asked is, for people who are looking at the whole DeFi landscape and seeing these, protocols start to pop up left and right, what do you guys think as far as or what do you see as the future? If we could see 5-10 years down the road, and the DeFi, obviously, Ethereum's DeFi is expanding and it's really big. The total volume locked is growing every day. And with multi-chain future, obviously, I'm sure we're going to see all these numbers continue to grow. But what's to stop a centralized, I guess you could say, entity right now from going out and creating their own? These, do you think we're going to have a few monopolies of platforms that people use, even though they may be decentralized, or do you think it's going to be this future where there's just tons and tons of different platforms that people can use to earn yield, and new cryptos being made every day, and then you can stake these new cryptos, kind of like Yieldly? At what point, do these protocols that are being built kind of run out of, funny money, I guess you could say?
I think osmosis, like how Ethereum essentially went to the top, there is going to be some big titans in the game that everyone will feel comfortable. Because even me, I don't like to use every platform, because like PackFi is so new that I'm staying away until there's $1 million or more, 100 million on there. So that, I think, like how Ethereum took over, there'll be one that takes a large market share, and then a couple sub companies. But of course, all the little guys that you described, new coins every day, shit coins, as we all know.
I have a big hunch that AlgoFi and XBack DAO are going to be two of the biggest projects on Algorand, to be honest, TVL wise, years down the line. But yeah, I mean, it's really hard to say. I mean, I know the question was about is there going to be hundreds of new tokens still going out in the future, and when is the funny money, so to speak, going to stop?
Well, yeah, because you got to think so many of these tokens, and even like Yieldly, Yieldly's going to reach its max supply at some point.
In like 3.5 years, actually.
At some
pretty
point.
Fast.
So what happens when that kind of stuff, all those these tokens run out?
Well, I mean, with Algorand, I'm not worried, because there's no Algorand wasn't designed to continuously give a yield on its token. It basically did that at first to draw attention to its token, and it was a great marketing decision, because I mean, part of the reason I found Algorand was because I was like, oh, what's this token that's paying 6% on Coinbase? Let me learn more about it. So from that standpoint, it was almost like a genius marketing decision to do. But yeah, it wasn't designed to give rewards out forever. So I'm not too worried about Algorand running out of tokens. In fact, I look forward to it, because then there will be no more token dilution. In fact, we'll likely reach deflation, because I don't foresee a day where people aren't losing their private keys and coins aren't just becoming lost in wallets that people can't access. So I do think we'll reach a day. I mean, it's not today. Right now, more tokens are entering the market than are being lost in wallets. But eventually, no tokens will be entering the market, and even if it's a small fraction of a percent that are being lost in wallets, that's still some deflation. But with Yieldly or something like that, that is a big concern, because the entire proposition of Yieldly, especially since they decided to not fulfill their DEX promises and things like that, their whole proposition is being a yield farming token and the yield on Yieldy token itself ends in like 3.5 years. So, it only had like a 4 or 5 year token distribution, and we're already, getting what, like 6 to 12 months into it. I don't know exactly when it launched, but
Yeah, we're almost, I mean, once summer comes around, June or July, I think we'll be a full year in. So yeah, that's kind of my question, because it's like, obviously right now and during the bear market, these things could be great to accumulate, and earn a lot of passive income. But my thoughts are, once, say, we stay flat or we trade sideways for the next year and a half, and then we start the next big leg up and run wise, at that point, I feel like a lot of these protocols, that's when I think you're going to see a shaking out of the ones who are actually going to be able to provide, something of substance, kind of like your, core, talk with the CEO of Opulus, Lee Parsons today, use case. You're going to start to see that only certain, tokens that actually have a use case beyond just earning more of that token,
Yeah, I love earning the yields too. But yeah, like you said with Opulus, I gotta run too, but I want to talk more about this again with y'all. I need some utility. Like,
Yeah.
earning more coin is cool, but I need utility, because I want also not just a high APY, I want the value to grow so that my portfolio grows more consistently.
Right. And I think earning money in different ways is good. I mean, that's why I'm still bullish on Opulus. Obviously, I can't wait to see what my first payout comes when April gets here. I hope everything on their platform is up and running and we can claim that, no problem. And so, that's something, because then you're not only just making money off of staking crypto, but you actually could invest money in a song and earn money off royalties. Or, however imagine a decentralized auto loan market where people can come and borrow money to go buy a vehicle, where other people are supplying money to said people, things like that. There could be all kinds of decentralized ways in which, we could diversify our ability to make money. And that's what I'm, most excited on and want to get into.
So this is the next big thing I think would help with everybody, and like mass adoption is like the format what Crypto.com is doing with the debit card. I know other platforms are doing it, but if AlgoFi could then like have me a prepaid card which part of it might mean some centralization, or it could be a digital card that only, we have a private key situation where you set up yourself. Then you link that private debit card or prepaid to AlgoFi, and then I can then take my rewards and put them on that debit card and go swipe my cash somewhere.
Well, I feel like what you'll see there is, think of it just how the world's getting more digitalized every day. I think you're going to come up even with like Apple, having the Apple Watch or whatever, and you got your wallet, your crypto wallet on there. Say it's the Para wallet, or it's MetaMask or whatever it is, and you go up to get gas soon. And this will be the thing that makes mass adoption, is when big retailers and big companies start accepting cryptocurrency as payments. Now, I don't know which ones are going to get accepted first. Obviously, Bitcoin is probably the front runner, and then you'll see others. But like, imagine being able to go to the gas station and put your your wallet up there and pay for your gas in Bitcoin. And then obviously it's even easier when you think about buying online, because like AlgoPay and different things, or or the Lightning Network for Bitcoin, or whatever you have for Ethereum, and then you can just connect your wallet and do the transaction through your crypto wallet. I mean, that I think is when you'll see that kind of mass adoption. I don't really know if you'll see a debit card, because why would you need a debit card for crypto? I get it, Coinbase offers it, but I think that's a way of mixing. That's a way of
like Apple Pay. They have the digital debit card. In terms of that, that's what I really mean.
Yeah, I could see that honestly very soon. I wouldn't doubt if that's a more common experience in the crypto space over the next couple of years.
But even then, it comes down to the point, like, unless, like, for me at least, who's going to want to spend their Algorand on daily,
I know people
expenses, unless here's my only caveat to that. The only way I'm going to be spending my Algorand on daily needs and things like that is if Algorand moons to like something insane, like we saw Bitcoin and Ethereum do, and where we're buying it at now at 50 cents, and it looks so minuscule that we're multimillionaires in Algorand. Like, at that point,
it'll have to be USDC or a stable coin, I think, will be the preferred method.
Yeah.
But all right, fellas, I'm gonna get out of here. Y'all continue. Appreciate y'all, everybody, for tapping in. I'll go hit a day high. So let's pray that we get our money.
Stay away from
All right.
67 cents.
Peace out, Will.
Yep.
See you, man. I'll go just hit a day high. Where are we at? Let's go see. We are.
Did it just hit it, or did it? I think it did earlier.
Let me go
honestly.
see. We're at 80 cents.
Oh, maybe it did. Yeah.
It got close to 81 cents. So it's probably up like 5%, 4 or 5%. I saw someone say in here, is that Lee Parsons interview up? We were obviously I was set to have an interview with him. Not that long ago. It was probably like 3 weeks ago. And with the whole lawsuit thing that came up, who was it? I forget who was even the guy, Lil Yachty or something. That obviously caused them to have to put some work in to figure that whole scenario out. And it kept getting pushed back. I'll say this: it kept getting pushed back for. It seemed like every week that we had it scheduled, literally something big in the news would come out on Opulus, and obviously one of them was them having to deal with the distributions of their tokens to the ETH holders. And there was, I think Lee just got upset having to pay all the gas fees of sending that out. I'm sure that wasn't fun for them and the team, but no, yeah, I pretty much just said, reach back out when you're actually ready to do the interview. Like, no sense in scheduling it every 3 days and then backing out. Part of me does wonder if, I sent a list of questions that I was going to ask over to him just so he could be prepared and have good answers thought of, and ready to go. And most of them were pretty generic and basic answers, but I don't think he wanted to avoid the interview by any ways. Like, I didn't get that vibe. Obviously, he could have. Maybe he didn't want to answer some of the questions yet, just because obviously, the one that you had with him today on use case, there's a lot of hot button topics out there, and the thing is, with the whole crypto world being so new and so speculative, like, I get I get people being upset that we bought into the Opulus token and we've been holding it and there's not been a use case. We still don't even have our NFTs, SNFTs in our wallets. We still aren't able to track the rewards we earned from the little pump song. And I don't even know about the people who got in on the big zoo. I wasn't even, that was one I think that happened even before. So like, yeah, there's definitely a lot of questions and sometimes it's better, I feel like, just to, or maybe his thought process is it's better just to wait until the platform's rolled out. There's people have something more tangible and then do an interview. But obviously to each their own. So that was just the answer, is that Lee Parsons interview up. I mean, I think it's still going to happen. It just might be a little bit down the road.
I mean, I really have a similar story. I mean, I'll do a quick flash of it right here. Back on January 13th, we were talking about an interview, and he said, "Let me get back. I'll do it around time we drop the SNFT," which I really don't know when that is. But that being said, I haven't heard anything from him until he decided to comment on my comment on your thread today, which was which was just so bizarre. Especially, honestly, even though a lot of people came to his defense, which I just think there's a lot of like tribalism in this space.
For sure. I mean, you got to think, man, people who put their money up on, and I'll say this, I would almost guarantee you have more money in Opulus than most people out there. And the thing is, people, no matter the amount of money they have in it, like, they think questioning or even critiquing any aspect of a project is fudding their own investment. And that's what they've been taught. And it's just not true. Like, you can ask legitimate things like, how many people have, and I'm not saying I don't trust Lee. Like, I think he has obviously I didn't know Ditto Music before, but it seems like he's built a good business there, and he has a great idea and a great project, and everything that he's rolled out so far. And obviously, yes, he's put the cart in front of the horse, I think, with launching the token and getting everybody so hyped up, and obviously the price has reflected that. I mean, it's already down to 40 cents from a high of 750 something. And I know it launched at 5 cents. So anybody who got in, at the seeding rounds, they're still up big, and they're, if you want to know who's selling, it could be them. But I don't know. There's so much, newness in the crypto market, and I'm, even new to so much of it that, I can't imagine, how a lot of people feel when they jump into something, especially if they jumped into Opulus on the way down. Definitely, I feel like that's probably why you see a lot of frustrations and a lot of, tempers flare. Because I'm sure he gets a lot of heat from just the communities and stuff like that.
Yep. Yep. No, I get it. I mean, and you're exactly right. I at one point before it took a tumble, I held 5 figures of Opulus. It's now down to 4 figures because it's taken a tumble. But I just don't understand how criticism is always seen as FUD, especially since it's been like what 4 months since the token's been out. There still isn't a single use case for the token besides staking, which isn't a use case. I mean, let's be real. Staking a token for more of a token that doesn't have a use case is not a use case.
No, it's a Ponzi scheme.
And exactly, you're here is more of this token that you can't do anything with. I mean, what is that? So
especially if it's obviously it was appreciating and no one cared. Everybody was glad. I mean, I was right there with them. Everybody was super excited when you're buying into something, and not only are you earning more of it every day, but that stuff you're earning is doubling and tripling. I'm like, obviously, yeah, it's super fun, but on the way down, that's when a lot of the questions start to come out and people start to get defensive and start to, that tribalism kind of you talked about.
Yeah, and I'm sure plenty of people watching saw what went down on Twitter before this live session. So let's see. How do I get rid of this thing right here? Let me get rid of this. Awesome. So, you made a post.
It was mine. Yeah, I know. I was out door dashing, trying to make some extra money. I come back to this.
You made a post about Opulus, DeFi, and Yieldly, and I just commented that said my opinion on your post that out of the three, Opulus is the least useful token, which I think is empirically true since Yieldly you can go and use and obtain numerous ASAs throughout the ecosystem. DeFi, although private right now, those that have private access to the app do have the use case for the token because they're paying less fees when they use the app because of the token.
Right.
And once the app goes live to the public, that use case is baked right in, ready to go. So Opulus is the only one that still doesn't have a use case. And yes, I've been told for months that it's coming. And just like here, Opal will have its day. And, Lee Parsons said, this isn't the only thing we will be doing in the future or what we are building. And yeah, I believe him. I do believe that in the future they're working on use cases for it. But the fact that there isn't a use case now is the reason why when I was checking my portfolio earlier when we were having a good day in the market, things like Yieldly were up 15%, Algo was up 8%, and Opulus was down 1% or completely flat. I mean, there is a reason for that performance. So all I said was, in retrospect, do you think you should have waited to launch the token? Much like AlgoFi is doing, they provided a great product and they're not launching their bank token until Q3. There's plenty of other projects in the ecosystem that are doing just that. HumbleSwap, TinyMan, AlgoDex,
Yeah.
A lot of the projects are launching their product first, proving to you we have a good product and building out the use case for the token and then launching the token. So all I asked was, in retrospect, do you think you should have waited to launch the token? And let's see.
Yeah, and that's where.
And he answers, it's like, no, you can't launch a token in this market. I could have moved to ETH and finished by now, but I haven't. Building something, let's see. And so I said, a lot of other projects have delivered a use for the token at the same time as launch or well after launch. I fail to understand why you couldn't have done so also, which I feel like is super reasonable. And he says because of the SEC, which doesn't make sense because if the SEC would have given you this much trouble, then they would have given you that much trouble if you launched on ETH too, which he's saying I could have been done by now if I launched on ETH. Would you not have had those SEC troubles if you launched on ETH?
I guess he's saying, writing in Solidity or whatever their main language is.
Which is a different argument though. His argument is because of the SEC, which doesn't make sense if you're saying you could have been done by now on Ethereum. And I also fail to figure out how that even makes sense anyway, because does that mean all the other projects are doing it wrong? All the other projects that are launching a token after they launch their app are doing so against the advice of the SEC? I don't think so. I don't think the SEC is telling people that you should launch your token 4 months before you launch your app. That's the only way you can do it. Like that. Yeah. In my opinion, that answer didn't make any sense.
I mean, obviously, he is trying to build a SEC compliant product, which is good, especially in that industry, and especially with, I will say, so many of the other music-based NFT schemes I have seen that have come out on Ethereum, where people have been rugged, they never got NFTs, or it just wasn't what it was supposed to be, and people were getting abused. So I do think he's building a good product, but I think you hit the hammer on the nail when you said there's nothing wrong with actually building your product and having it, speak for itself, and then coming out with your token. Zone is another huge thing that I did an interview with, Adi way before their launch, all about what Zone was going to be bringing. All of it was super bullish. I was excited for it. And then they had their rollout, and there's just so much, so much happens so fast, and you don't know how to digest it, especially for someone who's new in the market, and even someone like me who doesn't know how to trace everything and really see what's happening. It starts to bring up concerns, because if go back to Opulus's day one launch, it spiked up really high to 340, came crashing down. So obviously someone who was in early cashed out, took a big profit, and then it ran all the way up 750, whatever it was. And then obviously the people who were in early, or even maybe people who bought in day one, are taking profits, and that's what you're seeing. But I think it would have held, just like Zone is already back down to its what it was the seed round at, and people actually got in, were almost able to get in lower than that when it launched. And the reason why it's not holding is because there is no product. There is nothing tangible yet. And that's someone, for me, I invested in the Little Pump song. So I still don't have the NFTs or the SNFTs in my wallet. I can't track anything on how much I'm earning with this Little Pump song. Literally everything with this investment is it's a wait and see approach still. And it's just, you have to read through cryptic tweets, cryptic updates about when it's going to happen. And this goes for both Opulus, Zone, and many other platforms that are launching before, launching the token before the product. And I think if you're launching your token before your product, I'm just going to say it, it's a money grab. You're like someone, it may not be you. I'm not saying Lee Parsons is benefiting and he took everybody's money and is spending it. I'm not saying it's him, but somebody, whether it's a VC, whether it's an early investor, somebody benefited. And I would almost assume that, because I do know that BitBoy Crypto, they came out early on and said BitBoy Crypto, KSI, and who is the other one? There was another big YouTuber, I forget who it is, but there's been all kinds of people who were doing videos on Opulus, and now they've not said anything since the price has pretty much plummeted all the way back down. They pumped it, and I'm sure they sold and ran with whatever tokens they already had.
Yeah, that should have been a red flag from the beginning, to be honest. Yeah. You look at some of the artists that they're working with too. Some of them are actually being sued right now for pumping things like SafeMoon. There's a big class action lawsuit right now, and there's a couple of the Opulus artists that are tied up in that SafeMoon lawsuit as well.
And that's the thing. It's and it's not to say that Opulus can't, like you say, come through, bring out an amazing product that actually helps support the ecosystem that he says he wants to help. But I will admit, him getting super defensive, sometimes it doesn't bode well when, you're doing that publicly. I get it. He can say what he wants. That's the glory of the internet at times. But,
for sure,
it's. Yeah. I would also say with what you were saying, what your questions were, right? Good questions. Just like I had some questions on the Zone thing, and
I felt like they were reasonable. And I started out that thread by saying Opulus is a great project. I called it a great I think I said good project. I called it a great concept. So it's not like I was just there to bash Opulus, and it's not like I went out of my way to make these comments on an Opulus thread or a Lee Parsons thread. I commented on your post that involved Opulus and two other tokens, and he came out of nowhere. And I felt like my statements or questions were reasonable, and he took it very defensively. And in my opinion, it was very rude from the start, even though a lot of people took his side from it. And then he ended the thread by calling me a twat, and I was just like, how is this professional? How are you instilling confidence in investors when you're just, getting pissed at people for just stating the obvious? I'm just stating the fact that Opulus hasn't had a use case for 4 months. That is an indisputable fact. It's not like you
Yeah.
can say that I'm making things up. And I wouldn't.
Maybe
It's not like I want to be doing this because I have plenty of Opulus, and I first bought Opulus at like 60 cents, 70 cents, sold it at $5.30, and have been buying back in since $2, regretfully at this point. But I'm still holding because I don't want to sell for a loss. I don't want to be like, oh, I have these concerns about a project that I hold a good chunk of. You know what I mean? I'd like to
Yeah.
just be completely bullish, and it's not like, I don't know. I think people think there's like I get something out of being bearish, quote unquote, or like spreading FUD or whatever. It's like, you know how much more followers I would have on YouTube and Twitter if I was just a nonstop bull and I was tweeting like apple to the moon and just like posting fake charts that said like, oh, this looks bullish, things like that. I could have
Yeah.
2 or 3 times the follower count at this point if I was just a complete bull and you're to the moon. But it's just not. I wouldn't be being honest, in my opinion.
Yeah. And yeah, I completely agree. I mean, I think that, that's just it's weird that we're in this, obviously, I think the overall bear market that we're in is what's causing so many people to get frustrated and get upset and tensions. But yeah, I definitely agree that, even someone said, remember when Opulus was pumping, Lee was talking more about price action than actual product developments. I mean, that alone, and there's so many, Zone was even talking about, hyping up their AFK elephants. And the thing is, these, like you said, these things could turn out to be great projects. But I still, and this is one reason why I haven't really even been making as many videos on my YouTube channel. Not to say that obviously I'm still buying Algorand, I'm still buying into certain ASAs, I'm still bullish on the overall ecosystem. But honestly, I've even had certain projects reach out to me wanting to do interviews, wanting to come on my channel, and I have started to take a step back and think like, you have no product. Like, why are you coming to me? Like, I'm not an influencer. Like,
I say no to people all the time, to be honest. I mean, I've even had people try to offer me like tokens and things like that. I mean, to be fair, I have accepted donation tokens for sure, but I have had people offer like to basically have me market for them, and I'm like, no, I'm not gonna do that.
Yeah, because then it's like, then I feel, and I get it. I could be someone like a BitBoy Crypto who's like, yeah, you pay me a certain amount of this thing, and I'll put you on my channel. Obviously, I don't have as many followers as him. I only have like 2,000 subscribers, but I still feel like, even though I don't know each of my subscribers personally, I still feel like what I want to bring them is fun entertainment, not a, hey, look, this could be a great project and could be a place where you invest all your money, and then, but I have no idea, because like I said, I thought Zone was going to be a great project. And I thought that, it seemed like they had a great team ready to roll it out. And that was literally probably the biggest clusterfuck I've ever seen with a token launch.
Yeah, I mean, we got to be fully aware that a lot of people in crypto want to be early to the next big thing, because being early for good reason can make you rich. It truly can. But being early also comes with the risk of buying into something that actually isn't going to be that great. And a lot of projects are really good at creating hype, better at creating hype than they are at creating products. We have to be real about that. But I will say, I don't want to like rag on Zone or anyone in particular, because it very well could become a totally good project, and they just had a bad launch, because you also put into perspective that Algorand had a bad launch. They did. They had such a bad launch that they actually did token buybacks because people were so upset, and they were buying tokens back from investors, which they actually burned those tokens. So a lot of people don't know there's like 20 or 30 million burned Algorand out there because they bought those tokens back and burnt them. So it is a totally valid point to say that just because it had a rough start doesn't necessarily mean it'll be a rough project. It is certainly a red flag to be considered when evaluating the project, but it is not the end-all be-all for sure, but it is also the reason why you should never ape in on day one or even the first week of a project. If you need to get in and you think it's going to do great, use 5, 10, 15% of the money that you want to allocate to it over time. Don't just ape in 100%. And again, not financial advice, of course, but that's just my opinion.
Yeah, and I agree. And it's one of those things like, when you get in, take profit. Obviously I got caught up in a lot of the hype with Opulus and with that whole run up that, I didn't sell when I should have. And obviously now I see those effects, and obviously the money I've invested in it is pretty much, even the SNFT is just it's kind of the whole thing when you invest in anything in crypto, you have to be willing to literally lose every bit of the money you invest in crypto. Like even something as great as Algorand, like I love Algorand. I think it has great use cases, for the future, but it's not to say that something better couldn't come up and make Algorand look obsolete, and then all the money we've invested literally could go, be worth nothing. That's what you have to be willing to, that's what you're betting when you're jumping in on these projects, especially projects early who maybe don't have a product and or just have a token.
Yep. And I will agree with a couple of people in this comment thread that I will say one of the, I don't want to say mistakes, because I honestly am still net positive on my Opulus buys, because I honestly made enough on the first run up, and I didn't buy back in with 100% of it. I probably bought back in with 20% of it. So even though I'm down since I've been buying at $2 and to like 40 cents, I mean, I haven't bought since it passed below $1, but I'm down on that position, obviously, but I made enough on the front of it. So, like, yeah, I made money, but in retrospect, we really shouldn't be buying tokens if they don't have a product out yet. It is just is what it is. And I was completely enamored with the concept itself to not really consider that fact, because it's a fact that I knew. It's not like it was new knowledge to me. It's like, oh, I shouldn't do this. But Opulus as a concept was really exciting to me, because it was something that it still needs to be done. It's a great idea. It's a great concept. I do wish them a lot of success with it over in the long run. But I certainly agree that if crypto itself is already probably the most risky asset class, and you're adding an entirely new level of risk when you're buying a super risky asset that doesn't even have a use case yet. Because when the market takes a tumble, the first tokens that people are selling off are the ones that don't have a use case, the ones that people can't use. That they're just going to get rid of them. They're going to hold the blue chips if they are going to hold it all. If people are going to sell and they're going to stay in crypto, they're going to move to blue chips like Bitcoin, Ethereum, stable coins, maybe Algorand one day. But they're going to completely get rid of all of the tokens they have that don't have a use case.
Yeah, I'm loving the Joker's comments right now. He says, I've been broke all my life. If I lose it all, it's back to the same old, same old. But if I don't...
That's a great point to some degree. I mean, of course, you don't want to get yourself to a point where you're like, oh, cool, I have more money than I had, for the last couple of years, and then lose it all, because that's discouraging. And I've been there, honestly. I mean, I was there in 2017, 2018. I was making more. My portfolio was bigger than it had ever been. I was making more money as I'm 29 now, almost 30. So 4 or 5 years ago, as a 25-year-old, I had a good chunk of change in a portfolio. And then I watched it all just bleed and bleed and bleed after the bubble burst, and I ended up at less than break even. So,
I will say, and this is like, I feel like if you look at people who are successful, and whether it's trading crypto, trading stocks, whatever it may be, like I feel like every trader has to go through, almost like those type stages. Like you got to get burned using leverage before before you really know how to use it to your advantage. You got to get burned in holding it, and the elation of buying early on a crypto and riding it all the way to the top just to ride it all the way back down before you start to learn, okay, just like I dollar cost average on the way down, I need a dollar cost average on the way, or dollar cost exit, I guess you could say, on the way up. And it's like, because I look back at Thanksgiving is pretty much like the week of Thanksgiving is like right when everything started to go down. If you look back, from being at all-time highs and started just slowly coming back down. And it's like, if I would have sold there and bought back in now, I mean, you're not selling all of it there, but if I would have started to take some profit, you're looking at having a heck of a lot more money, at a time like this to be able to, flood into the market. Whereas I wrote a lot of those things down. Some of them I finally cut losses on, but it just, that's why it's, it's so important to have that game plan on actually taking profit. And I feel like it just doesn't get talked about enough.
Yeah, I mean, I want to cut my losses on Opulus, but then I look at this chart over here. It's actually pretty much the only. I do want to sell some of my Yieldly too, but I want to wait until that pops. And not because although I have concerns, it's not because I'm like ultimately bearish on Yieldly. I think Yieldly will do great in the long run. I just want to put my money elsewhere. I'm just waiting until it pops. But with Opulus over here, as much as I want to take my money out of it, if I'm looking at this chart, I think any day now it's going to pop out to the upside. And, of course, I could be wrong, but in my opinion, it does look like we could see some upside potential for sure.
Yeah.
Um,
And that's the thing. It's like if
we could see a night.
they have the working product and it flips, I mean, that's where I could easily see Opulus $10, $15 or more.
Yeah, and I will say I'll agree with Joker here. I am staking my Opulus, and for those that don't know, you can stake your Opulus on
Yep.
Kucoin.
That's where mine's at.
Occasionally, the it, the staking is full, so sometimes you can't get your Opulus in there. But especially with a lot of these red days, people have been selling their Opulus, and sometimes you can check back a couple hours later or a day later, and it opened up a little bit, and you can stake your Opulus. So I stake. I'm probably getting like 15 Opulus a day right now staking. So hopefully one day it'll pop, and I can sell some of it, and I can move it. Because honestly, there are so many different ways to earn yield in this ecosystem now that I kind of want to just participate in various yield farming with like Stable and Algorand and basically, honestly, I just want to move that money onto AlgoFi. If I'm being real, almost all of the money
Right.
I want to move over to AlgoFi.
I mean, yeah, because AlgoFi, like I said, it's a working product that not only it's fun just to go claim your benefits on Qcoin if you're staked in one pool, but then you're banking on that one token to turn around and actually have its day in the sun. Whereas like with AlgoFi or like a Yieldly, you can kind of move your money around as the market is fluctuating and take advantage of as many spots as you can.
Yeah, the only reason I didn't add the volume to this chart, Padre, is just because I had to take off an indicator because I'm paying for or a cheaper version of TradingView where I only can add like 5 or 6 indicators at a time. But yeah, volume's real low, and it's been real low since forever, really. I mean, we only really had crazy volume on launch.
Day one spike. Yeah, that's where a lot of people were calling it pretty mad about the rug or whatever it was, just because they saw obviously it runs super high and then crash very, very fast.
Although sometimes you do see a nice red volume candle a little bit before the bottom. Like this could be a sign of the capitulation candle, just as this back here was a sign of the beginning of the bull run to some degree. But I don't know. In my opinion, I do think that Opulus is going to pop out of this to the upside, just the way I'm looking at the chart.
I feel like, like I said, they have a lot, by April, I think they're supposed to have the product available to where people can come claim the SNFTs, can track how much they're earning from the ones they've invested in. Obviously, I'm sure be able to invest in others, even though I think that will still be done via Republic. I would still be bullish that if they can get it done, get that at least rolled out, and the market starts to turn around a bit, I could easily see this back in that $2.50 to $3 range on having a product. And then once they unveil the use case of Opulus and have the ability for people to, stake their Opulus on the platform as a lending and borrowing mechanism, like you see on AlgoFi, where you can, supply your algo for people who are needing to get loans, and they can borrow the Opulus. I think I said algo. Supply your Opulus and earn APY, APR, and people can take loans out and obviously support artists. And then you can start to put your tokens and invest in whether it's albums, songs. That's when I think you could really see Opulus pop and start to make that big run that I think a lot of people were expecting it to continue to do if it would have all rolled out pretty smooth.
Yeah, no, I agree that it's certainly not going to get anywhere near all-time highs without a product.
Oh, no.
But some good news in the market overall, and a day where we see sustained green 10, 20% green days. I think we could see, regardless of whether there's an app or not, we could see Opulus get to $1.50, $2. I don't think it'll get anywhere close to its all-time high until it has the use case that it promised us. But
yeah. So here's my other question on your thoughts, and obviously the community can join in as well. But with the bear market that we've seen right now, and with things sliding out, I mean, you still to your point, when things start to look super bearish, which right now, even for things like Bitcoin, and there's a lot of fear in the market, there's a lot of stuff going on there. How in the world does Shiba Inu, Dogecoin, and things like that continue to stay as high, especially with the inflation rate at which more and more of those are being printed. Like, are people literally buying, or is this just bots trading?
Um,
What's your
y-
thoughts?
it's a good question, but I wish there was a way I could see like on-chain metrics for those
I don't think
for meme
institutions are
tokens.
buying in
No, they're definitely not. But at least with like Cardano, you can see the metrics, and I honestly do think it's a similar situation as Cardano. I mean, uh, you have Cardano here, which is in number 7, and I do think a lot of that, and it was at number 3 at one point. I think a lot of that
Yeah.
is the community that they built. That's just hardcore believers that aren't selling their tokens.
So read you say
Shiba's dropped down to 14, but that's still way too high in my opinion. And to some degree, that highlights the fact that, or it highlights a red flag in my opinion that the market may have not seen the level of capitulation that it needs to have before a reversal. Because, in my opinion, with these meme coins still being in the top 15, that just goes to show me that there's still a little bit too much greed in the market. And markets don't bottom until we've reached peak fear. And I don't think with SHIB being 14 that that's peak fear. I just don't. I don't see it. To me, that's a sign that we still have too much greed in the market. Um,
But I
but
don't
that
think we'll see them fade away until like some type of regulatory thing starts to come in and maybe try to get rid of those, because those communities, if really retail is what's holding those there, even with the inflation rate at which more Shiba Inus are getting brought in and more Dogecoins are getting brought in, if that's really retail that's buying all of that up and keeping that market cap up that high, then it's got to be something that pretty much, or some type of something to break the community, I guess you could say. But it
yeah.
just doesn't make sense to me that you have Shiba Inu sitting able to hold itself, because it was as high as 10 or 11 and has only fell 2 or 3 spots.
Yeah.
Yet you have something like Algorand, even Matic, CRO. I mean, so many other ones, Decentraland, falling big spots, and they actually have a working product and use cases and just overall, something that's stability building towards the future of what crypto is.
I think it's a fool's errand to try to understand meme coins, to be honest. And I'll be real. I will say uh, the only tokens in the top like 20 or 30 that really don't make any sense to me, at least their valuations, are honestly Cardano and what else? Cosmos. I have things written down right here because I'm actually in the middle of writing a newsletter. I'm going to start doing weekly newsletters, but right here I wrote down all of the, TVL market cap to TVL ratios, just because it's part of the piece I'm doing. And by the market cap TVL ratio, for those that don't know, the lower the ratio, the closer to 0, the more undervalued it is, and the farther away from 0, the more overvalued it is. And you have things like, for example, Ethereum, which has a TVL, at least at the time of doing the math yesterday, had a TVL of 2.3. The ratio is 2.3. And then you had things like, let's see, you had Matic, which was 2.3 as well. You had Luna, which was 1.3. And then you had Cardano, which was 179. And
Yeah.
which is insane. And then you have Cosmos, which is 7,095, which is
That whole
absurd.
network has been on fire. Even like Juno and some of the things under it are like hitting all-time highs right now.
Out of all of the smart contract platforms that are currently above Algorand, for those that are curious, has a TVL ratio of 46.4, so it's still actually relatively high. Out of all of the smart contract platforms that are ahead of Algorand in market cap, there are only 2 that have a worse TVL to market cap ratio. Every other single one, whether it's Binance Smart Chain, Solana, Ethereum, Luna, AVAX, DOT, Matic, CRO, Near, Tron, and so forth, they all have a better market cap to TVL ratio. So that's part of the reason why I think Algorand needs to figure out how it's going to boost up its TVL in order to be seen. Because clearly you can see outside of a couple outliers, and like ADA, which I think that outlier exists partially because the community is so almost cultish that they're just not going to release their tokens. So outside of ADA and Cosmos, it clearly matters for every other smart contract platform. And as I said, the number one market cap has a ratio of 2.3. The number two smart contract platform of market cap is Binance Smart Chain, has a TVL ratio of 4. Number 4 is Solana. They have a TVL ratio of 3.9. Number 5 is Luna with a TVL of 1.3. And then Algorand is 13th on the list of smart contract platforms, and it's 46.4. So I do think a lot of that has to play. I don't really remember where I started this conversation or where I'm going with it, but that's where I land. Are we going to fly back to 110 or not? Fly back, maybe. Hopefully, let's cross our fingers. It's really hard to know with the current state of the world right now. I mean, you have the global crisis in Russia and Ukraine, of course. You have the Federal Reserve meeting coming up on March 16th or 17th, I believe, or maybe both of those days, in which they're expected to start doing 0.25% rate hikes for the next 7 to 9 meetings that they do, which could hinder a lot of growth into the market. Some people think it's already priced in. Of course, we'll have to wait to see. None of us have that crystal ball, but there are certainly some things on the horizon to be a little concerned about. But I do also think that the time to sell was 2 months ago at this point. So I wouldn't be selling now. Just buy DCA, buy and hold, stake, do whatever you can do, or just walk away from the computer for a couple weeks and stop looking at the prices. But let's just run through a couple questions and get on out of here because we've been here for a little bit.
Yeah.
Joker's asking, what's the word on Dequency? Dequency, for those that don't know, it's like a music synchronization platform, which is really an interesting concept. I don't understand it enough to give you the full rundown, but I do know that they just did their initial seed round, which was headed by Borderless Capital, I believe, followed by some other big names like Kimball Musk and his sister, which is really interesting to finally have the Musk family investing into an Algorand project. So that's super interesting. I'm trying to get them onto my show, and to be honest, I even reached out to Kimball. I found his email and I reached out to him. So who knows? Maybe one day I'll get him on the show too. But
that'd be cool.
Yeah, for sure. What's this next one? So, if you lend and borrow, you actually lose out on an APR compared to just lending. Oh, no. You definitely don't lose out. Well, I guess maybe to some degree you lose out. It's hard to understand.
I guess you would want to lend and then borrow on 2 separate ones.
Yeah, it's hard to understand the question a little bit.
Lend stable and borrow USDC, or lend algo, borrow USDC.
By miss out, the only way I can interpret this is if you supplied USDC, you would be being paid 2.32% supply from the protocol and then 11% from the DeFi rewards program that Algorand has that they allotted to AlgoFi. And if you borrowed USDC or stable, for this example, you would get 11% APR for borrowing, but you would owe 4% as interest. So I guess technically the net difference would be you'd be getting 7% over here on the borrow versus 11% on the supply. I hope that answered the question. Let's see what else we have here. We have.
Ooh, is NF domains live?
I'm not sure if it's live. I know it's about to be live any day now. I just
saw Crypto Nerd said, "All right, who took CryptoNerd.algo?"
Oh, I think you can pre-register, and it's really unfortunate. Like people, I think it might be ANS. Algorand name service. I know Reach was posting about it that somebody had already taken Reach.algo from them or reserved it or whatever. Let's see.
Oh, maybe that's what it is.
Anything else we got there? Let's see. Yeah, I think we got all the questions. If I'm not seeing anything, just throw your question down real quick in the comments, and if not, we're just going to wrap this one up. It's been a long one already, but I think it's been a good one. I appreciate everyone that stayed and watched until the end. If you're not following David's channel, Crypto for Change, definitely go follow his channel, subscribe to it. And if you're not following C. Will's channel, I know he's gone now, but go follow his channel. It's the Passive Income Network. It might be tagged in the description. If not, I'm sure you guys can figure it out. If you're not subscribed to this channel, definitely subscribe to that one as well. I appreciate that. And I'm not seeing anything. You got anything you want to add to the conversation, David?
No, I mean, obviously, I'm excited to see where we go here, over the next few weeks. Obviously, for those who are following my channel and whatnot, I still have quite a bit of cash ready to jump into the market. Obviously, at this point, I'm like, bring on the red candles. Like, let me get as low as I can. because I think I am, the way I see it is, if we're in a bear market and we don't end up flipping around, and by bear, I'm mainly thinking of Bitcoin. If Bitcoin is in a bear market and it's only going to go down and bleed out more, and it's going to, below 20,000 or something crazy over the next year, whatever it is, and we're in a crypto winter, like, obviously I'm just going to be buying and accumulating over time. But if we are not, and we're still, we could still see another one last run up above, the previous all-time high, like, there's going to be some good opportunity to make some good money here over the next, year. And so we'll have to see what happens.
Hey, on that note, I appreciate everyone that stayed. I do have to wrap it up because I am an idiot and didn't realize that this went for an hour and a half, and I'm supposed to meet a client of mine. For those that don't know, I'm a realtor, and I have to have them sign this offer, and I have to get it sent to it because they're going to be buying a house. So I actually have to
Boom.
go. I was supposed to meet them 5 minutes ago to get them to sign this paperwork. So
well, then get out and go do your job.
I'll catch everyone, they're right down the street. It's not too big of a deal, but I will catch everyone in the next video. Thanks for staying to the end, and thanks for joining me, David.
All right. See you guys.
Peace out, everyone.